Excel accounting practice problem. Rental income, customer deposit. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the Excel worksheet from a blank sheet, now continuing to enter transactions into it if you have access to it. There's two tabs down below, an example tab and a practice tab. The practice tab starting out where we left off last time, the example tab in essence being an answer key. Let's take a look at it now. We are basically running another scenario where we have a deposit that would be put in place, meaning a prepayment type of situation, that being if you're in a rental type of situation, often then having the case where you have the deposit, some type of deposit that is going to be like a prepayment, something that you're going to receive cash for, but for which you haven't earned anything, and therefore, meaning you haven't done the goods or services in order to earn that cash that has been received. So you can't record it as revenue, but should be recording it as unearned revenue. Our scenario is going to be in our guitar shop. We're going to have our guitar equipment. We're going to be renting out a band set that we will be renting out for use and having the rental income from that. So we might have like a couple guitars that we're going to be putting together, an amplifier or something like that that we would put together. Now, if you were to do this in the QuickBooks system, then of course you would want to think about how exactly you're going to be setting up your items, because you would also want to be thinking about how easily it would be to market this type of rental process. Meaning you might just say, instead of saying I'm going to rent out one piece at a time, a guitar costs this much, second guitar costs this much, right? The drums cost so much. You might then say a package deal that you can rent this group of items, say 2 guitars, a drum set, amplifier, and so on, in this package deal, and set a set price, making it easier then to set up the process to enter the invoice and collect the security deposit on it. You might then say that you're going to collect, 10% of whatever the outstanding bill is. You might have other items that you can add to it. So if they want to improve something like have a more loud amplifier or add another amplifier, those could be add-on type of features. So you'd have to think about how exactly you want to set up your process. Then when they book the time that they're going to be using this band set, this equipment, we're going to want a security deposit in order to lock down the date. And that's what we're going to get the money before we actually rent the equipment. Then when they come in and rent the equipment, actually using it, that's when we're providing the actual goods and services. And that's when we would then record the invoice and the payment and so on at that point in time. So we're going to do this the first way we saw with the undeposited funds, in which instead of recording undeposited funds at the point in time we receive the security deposit, we're going to put it into a negative receivable for the same logistical reasons we talked about when we looked at the deposits or the unearned revenue section in the past. We won't go into that in a lot more detail right now, but the general idea is that the subledger is going to be a little bit easier to track. It'll be a little bit easier oftentimes for accounting software like QuickBooks to tie out the prepayment to the amount that we're going to be receiving later, the invoice. And so that's the system that we will follow here. So I'm going to go back to the practice tab. I'm going to do some cleanup work. I'm going to hide some columns going from the skinny J. And we're going to go on skinny J to A, skinny J to A to skinny J, right click and hide those items. Then we're going to need some more columns to work in around here. So I'm going to be copying from K to N. I'm going to say Control C. I'm going to paste that in the skinny right here. In the skinny, right click and not paste it, but insert the copied cells, inserting them. I need a skinny column between N and O, between no. Because it's not no, we're going to say something's between there. We're going to right click on the skinny, or let's copy it and then put that right before the O. I'm going to right click and insert here. So now we've got the skinny there, and we can then hide these columns on the left. Skinny to the K, right click and hide those columns. And then I'm going to format our new sheet. So I'm going to select the first little row here. Go to the format painter and just paintbrush that on down so any of the indentations don't mess us up. So we'll do that, and then I'll just delete everything. So we got a nice blank slate, or a nice blue blank slate. A blue blank slate And then I'm going to copy the ending balances from the last one that we did over here. Paste them on over to our beginning balances, pasting them specially with the 1, 2, 3 values only. And then delete the middle column so we can focus just on the stuff we're doing at this point in time. So we're going to imagine that someone calls up and they called up on 2/27. Again, everything's happened on 2/27. That was a busy day for us apparently. And they called in and they're saying, I want this band set that we're going to be setting up. Now again, we're going to say, well, we would like to lock you in to that time frame so we can't rent it somewhere else, and we want you to commit to it by giving us a deposit. And so we're going to collect the deposit. Now you might set up the deposit, again, setting it up in accounting software. You might set up, for example, an estimate. You might make an estimate which doesn't have an actual transaction to it, so that you can then generate what the cost will be or is expected to be. And then you might use that estimate to calculate the deposit, which might be like 10 or 20% or whatever of the expected price that will be received when you do the actual rental. So we're going to imagine that has taken place. The estimate isn't something that would be involved in our actual financial transactions, but is something that accounting software can give you that added level of detail on. And then we're going to say that we're going to have the deposit of $200. So we're going to say here that we're going to get undeposited funds, cash, or some type of payment of $200. And then instead of recording it to undeposited funds, making a positive liability, we're going to make a negative accounts receivable so that we can track it in the subledger, tying it out to the invoice that we will then make after this when we actually make the sale. So we're then going to say there's the debit and there's the credit. If we post this out then to the trustee trial balance, we're going to say in K or X5 equals the $200 increase, bringing the undeposited funds for both February and year to date to 200. Accounts receivable then is the next one. We're down here in X6, picking up the credit of 200, bringing the balance down to 21,976 for both the year to date and February. Notice there's no impact on the income statement, even though cash has been received, because we haven't earned the revenue yet. So then we're going to do that to the general ledger, undeposited funds here, second account on the trial balance, therefore second account on the GL as well. 227, that's where all the action is on AG15. AG15 equals left till we hit the wall, scrolling up to pick up that undeposited funds of the 200, enter. There we're at now, the 200 in undeposited funds, that matching the trial balance, and we're out of balance on the GL by 200. And then we're going to go over here to the accounts receivable. That's the third account on the trial balance. It's the third account on the general ledger. We're going to be posting to the GL. A lot of activity in the AR. A lot of stuff happening on 227. That's when we really got stuff done. AK16 equals left to the wall. We're picking up then that $200. And there it is on 21,976. Now we also want to record this to the subledger. So we're going to go all the way to the right to the subledger to indicate who put the deposit down. This is where the key is. This is where I wouldn't have the subledger as easy, at least, if it was a liability for the customers, right? Because a liability you would think would be vendors to have a subledger. People we were buying stuff from, not people that are buying stuff from us. So we're going to go over here to the subledger and say this was all the way for, did I make a new client for this one? Customer 5. We got to make another client for this one. Customer number 5. So we'll make another one over here. I'm going to copy. I'm going to go from the skinny on out to the DB, Control C, and then we're going to insert that right here in the skinny. We're going to right click and insert. The right click is sticky, being sticky. And I'm going to make this customer number 5. We're going to delete the beginning stuff, the activity, and this one I'll just leave blank down here, just in case we have some other customer we need to deal with later to add it there. And then, so then I'm going to say that this is going to be on 227, and DE5 equals left until we hit that wall again, all the way to the left. accounts receivable 200 credit, we see we have a negative balance in customer number 5, which is strange because usually you have the invoice first, and if it's a negative balance, that means we owe them money, which means it shouldn't be an asset but a liability. But we want to put it here on the asset side of things because we can track the customer data in there more easily. When I create the invoice afterwards, I can tie the invoice to that prepayment a little more easily oftentimes. And that's how a lot of software, you might see that in software like QuickBooks, people using that in that format as well. Let's double click on this check data check. We're going to be adding these last two over here. These last two, we're going to add the 200 and then we're going to add the 0. So that put us back in balance. We're at the 21,976. That 21,976 should match what's on the trial balance to 21,976. So that looks good. And then we're going to say, let's put that undeposited fund into the checking account. So we got the 200. Let's just move that on up to the checking account. So we're going to assume that the deposit happens. This would be done with a deposit form. Checking account is going to be increased. At the end of the day, we're going to deposit this thing. And then the other side is going to go into the other side is going to decrease the undeposited funds. Let's do an indentation here. And notice, I know I did a lot of stuff on 227, that the whole point, you'll recall, of this sub account of this clearing account, you might call it, of undeposited funds, is to make sure that we deposit it into the checking account in the same format as we expect it to be seen on the bank statement. So that might mean that any cash that we receive, for example, during the day, we would deposit at one point in time, and we would want to then make our transaction into the checking account match the cash deposits. So in other words, I know I did a lot of stuff on 227, but we're imagining that when we put it into the checking account, we're doing it in the same format as we expect it to be deposited into the bank. That's going to be the point, whether we're using cash, check, or whether we're using like credit card type of transactions. Okay, so the checking account, then let's post it out. We're going to go up top and X4 equals, we'll pick up that 200. And then secondly, we've got undeposited funds, has the 200 in it. So we're going to say F2 plus F2 on the keyboard, pick up that credit of 200, bringing it on down to 0. Checking account at the 104,202. No impact so far on the income statement because we haven't earned the revenue yet, because we haven't given the equipment for rental. So on 227 in the checking account, let's post it to the trusty GL, or the GL over here as well. The GL is going to increase to that 104,202. That matches both February and year to date on the trial balance. And then we've got the undeposited funds, second account on the trial balance, second account on the general ledger. Scrolling down to cell AF16 2-27, and then on AG16 equals left until we hit that wall, scrolling up to pick up that undeposited funds, $200, bringing it back down to 0 with the clearing account. Notice the clearing account goes from 0, goes up, and then we close it back down. It's not just a temporary account like the income statement accounts, which close out periodically at the end of the month or year, but rather it's a clearing account that's clearing out much more rapidly and used for a very specific purpose. Back down to 0, that matches what's on the trial balance. So it looks like everything is lined up, and next time we'll continue the transaction, imagining the client comes in and actually picks up the equipment, at which point in time we're going to say that we have recognized the income at that time and record the invoice and possibly receive the payment. So this is where our trial balance is standing. We've got like our two legs here, the February and the year-to-date numbers. So you can see if your numbers are standing in the same kind of way, standing upright and proper and using the same numbers.